Welcome, everyone. Today, we're diving into the world of fixed income and exploring opportunities in the bond market. And we're spotlighting the Franklin Templeton Short-Term Bond ETF, FLSD. Joining me is Alex Lee, Head of Canadian ETF Product Strategy at Franklin Templeton. Alex, great to be with you.
Thanks for having me here today.
I thought we might begin with just a quick wrap-up of how the bond market performed last year.
Yeah, so Canadian bond market had a modest year return, returning 4.2%. There were a lot of expectations going into the year, given that 2023 we had a strong performance, and there were a number of rate cuts that were priced into the market. We in fact actually realized 175 basis points of rate cuts, and inflation was near the 2% target from Bank of Canada. So with that, I think some investors were underwhelmed, seeing a return that was in line with where the yields were. But on the other hand, I think some investors were relieved to see a positive year of return, especially after a challenging first half of the year.
In the Canadian landscape, I'm sure that there were some areas that performed really well and then other areas that might have underperformed. Can you weigh in on that a little bit?
Short-term bonds did well, I think, benefiting from yields dropping on the front of the yield curve. And so I would say that was a good place to be. The belly and the long end, we actually saw yields rise, so it underperformed against the short-term bonds. When looking at credit, we saw corporate bonds outperform government bonds across major segments. And so that was a positive contribution, especially for lower quality bonds. One area that I thought was disappointing for investors were the long-term federal bonds, which returned minus 2%. So that's an area that we saw a lot of concerns throughout the year, given the volatility.
Yeah, and so it's important, I would gather then, to have an active strategy. Can you comment a little bit maybe on why it's so important to be active with a portfolio?
So when you look at passive indices, it tends to overweight based on the size of the debt. So that tends to be more government bond oriented, which can be good at times. But from our end, we can be active, being selective, having maybe more corporate bonds at various times to provide the right balance and higher yield. Even looking at from the credit market, just like equities, it tends to be very concentrated in very few sectors. So we can better diversify looking outside of those key areas. At the same time, when we look at the credit market today, the spreads tend to be very tight. So we want to be very selective on the type of corporate bonds that we own today.
So maybe what we could talk about now is specifically about FLSD and what makes it different compared to other short-term bond strategies.
At its core, as intended, it's Canadian investment-grade short-term bonds. The secret sauce comes from the plus side, where we can go outside of our universe to either complement or find ways to enhance return opportunities. As I talked about before, our fixed income market is relatively small and concentrated in fewer areas, so that allows flexibility for us to enhance the returns. What I think makes us unique is that global aspect. So the Franklin Templeton Global Fixed Income team manages roughly about $300 billion in CAD terms. And so that gives us scale and size to be able to source bonds efficiently, as well as getting the right prices. And having on-the-ground research allows us to have more depth understanding of companies and the opportunities that we see. So I think that scale allows us to better improve the returns and opportunities that we see for investors today.
Yeah, it's a super important point. So I can't believe we've come to this, but Alex, do you have any final thoughts for potential investors or current holders, or anything you want to share about the fixed income market?
Yeah, I think on the macro side, we think short-term bonds are the sweet spot. I think investors are grappling with reinvestment risk as rates continue to move lower, as well as volatility stemming from duration. So I think we're in the right sweet spot for the strategy. In terms of opportunities, it's yielding 4.2%. We have that A credit quality that's a lot of investors are looking for. And duration being less than 3 years, it allows us to have less volatility related to interest rates compared to the bond universe. So those are key areas that we think are important for us to consider. And we've demonstrated adding alpha with this strategy pretty consistently as well. So in today's market environment, we think it's a great risk reward to be in this strategy.
Fantastic. Well, thank you for sharing those key themes. It's been a pleasure to be with you. And for investors who are listening, if you're interested in learning more about Franklin Templeton's ETFs and about FLSD, head over to Franklin Templeton's website or to ETF Market Canada to learn more. But thanks for watching, and we'll see you next time.